Andre Cilliers of TreasuryONE. I'm sure you are in big demand at the moment, Andre. This rand bouncing all over the place. Last time we were looking at the rand getting down to 14.50, then back above 16 rand in a fortnight. What are you telling your clients when they pose the obvious questions?
Yes, good afternoon, Alec, and to all our viewers and listeners. They'll see that I've got a strange background behind me today because I'm up here in Limpopo in the Cilliers area attending to some of our clients that's in the citrus industry. The citrus industry that we've known for a couple of weeks now, and it's been discussed on television on various programs and so forth. That's actually faced with a perfect storm. An exchange rate that is not really weakening, although some people think that it does. But the euro at exceptionally strong levels. They're faced with extreme increases in their logistical cost, whilst prices for their product is not really increasing. So it's kind of a perfect storm, and we're attending to some of our clients here with their needs in terms of hedging requirements, what they can do, how to get the best out of the exchange rate in these times of volatility. So you're asking what's happening. Um, you know, when it started running up, first of all, we know that the Ukraine war had a dramatic impact, especially on the European economy and their serious dependency on gas and oil out of Russia and the impact of sanctions on their industries. Secondly, we are faced with higher interest rates, and we know that we've had a 50 basis point move in the US last night. We also know that the situation in China with COVID led to the closure of harbors and ships standing and lining up in front of harbors, not being able to being offloaded, and that creates a problem with shipping. It creates a problem with you know all sorts of things. And at the back of that, we also had the KwaZulu-Natal floods. We had the Durban Harbour that impacts severely on our economy and the flow of goods. And hence we had seen extreme volatility. So what is it that then, for instance, last night, after the announcement of a 50 basis point increase in the US, led to a rand this morning all the way down to 1543? That's quite a move. From this week, at the beginning, we started on Monday around the 1610 level. All the way down to 1543, and now we're already back up at 67 again. It's simple. The market is slightly disappointed with what happened by the Federal Reserve, not because of the move of 50 basis points. That was expected, that was priced into the market. But in the outcome and the press conference by the Federal Reserve president, he clearly said or suggested that they will not really look at 75 basis point increases. Now, the market is an interesting place. That they're slightly disappointed. With inflation still on the elevated level, they want the Federal Reserve to step up their aggressiveness in terms of interest rates. But it was kind of expected that if they come out, if the market is slightly disappointed with that speech, that it might pull back a little bit on the euro and then also see a bit of a strengthening on the rand. And that's exactly what happened.
It's so interesting. I was talking yesterday with David Bacher from Corian, and what they do every month is have a look at all the asset classes. And he said in the month of April, of the 18 asset classes that they monitor, only one went up. Everything, the other 17 went down, and the one that strengthened was the US dollar. Now, that suggests that something big is happening in your area of expertise in the Forex market. Why would that have been the case? And maybe just extrapolate, was this a one off, or are we likely to see a continuation of that trend?
This whole thing is a story of dollar strength. If we look all around, it's dollar strength. So, with the information that you've just given, that's no wonder that the dollar is the only asset class that gained. I went and looked. If you look at the euro rand, for instance, then the average rate of the euro rand between July and December of last year was 17.34, whilst the average rate for the dollar rand was 14.88. Now, if you now look at where the rand's trading currently, it's actually weaker against the dollar because it's trading around the 1567 at this point. But if you look at the euro rand, then that's very much stronger. It's trading around the 1655, 1656 levels, whilst last year in that same period, July to December, it was up at 1734. That simply tells you that this whole thing is a move of the dollar and not a weakness of the rand. And that's the dollar performing, and it's all on the back of interest
So
rates.
where to next?
Where to next? Well, it's quite simple. We have to track the dollar. We have to see what happens there. The dollar index is trading at 20-year highs. So, in my opinion, slightly overvalued. But as long as the war continues in Europe and Europe's economy is very dependent on what happens there, I think they're also very jittery that this might increase. The escalation of the possibility and the dragging in of the rest of Europe and what could happen there makes the European economy very, very vulnerable. And as long as that's vulnerable, as long as the UK then depends on the US, on Europe, that is also vulnerable. So that whole area is a very vulnerable area. And that continues weighing on the strength of those currencies, adds to the weakness, and continues adding to the strength of the US dollar.
So are we then likely to see a perpetuation of that trend and the rand being affected by this dollar strength, as you said, that the major trend that's in the forex markets at the moment?
Well, fundamentally, in South Africa, if you look at all the factors locally, then the rand is actually in quite a good position. And I've said before that if you look at the Russian-Ukraine war, geographically we're far removed from that. Our dependency on the Russian economy in terms of our total trade with them is very limited. So, and if you look at the movement of the currency, last week on Friday, we had seen the rand up at the 16 levels. We ended up back down at 1575. On Monday, when the volatility was extremely low and the liquidity was low, we had seen it trading up. But on Tuesday, when we opened and liquidity came back, we saw the rand strengthening. Last night, we saw the exact same resilience. So the rand is very, very resilient. We are still one of the bankable emerging markets. And one should be cautious to call just weakness of the currency. I think the resilience will continue. We might see slight weakness at periods where if the dollar moves quite a lot against the euro and it breaks through below 105, that we could see the rand moving up closer above the 1610, 1620 levels again. But the resilience will remain. And any retracement of any movement on the dollar will see the rand moving back down lower to stronger levels. So if I speak lower, I speak in terms of numbers, in other words, a stronger rand. So I think we can put the rand into a trading range of 15.5 to 16.5 as a very, very wide one, uh, based on the factors that I've mentioned, but most probably rather retracing back down closer to the 1550 levels, uh, and end the year with an average around the 1530 to 1550 levels, with not a minute of surprise on my side if we do see it at 15 and slightly below 15 within the next couple of months again.
Andres, so putting it all together, exporters and importers, how are you advising them right now?
Okay, so in terms of our exporters, when we see levels closer to the 16 and above 16, we strongly recommend that our exporters take the advantage of those levels, adding forward points on the forward curve to those kind of spot rates presents them with very lucrative rates. In terms of our importers, we recommend that they hold off a little bit at those levels and rather look at levels below 1550 to start taking forward cover there again. And so to do that, one should not wait for that actual happening of that level. You should place orders in the market. Speak to your advisors, speak to us if necessary, but get your orders in so that they are there. I was asked the question today why an order was not triggered when the rand traded up at 16.20 during the course of this week, at the beginning of this week. It's simply because if you look at how orders and everything are stacked into the market, into electronic trading platforms, it might trade up at a certain level or below a certain level. But if your order was way back in line of the queue, then there might not be enough liquidity to fill your order. So the sooner you get your orders in, the easier and the greater possibility of your orders actually being executed. So, live closely to your advisors, speak to them. If you don't have advisors, get some advisors, and try and understand how the market works and look at opportunities. But 1550 and below is importer cover level. 16 and above is exporter levels.